Yo, what's going on? Hey, want to go over a quick trade that we took today. It was a little bit of a slow day, but I made about 3 grand. Well, all of it came from this NETE trade that I took around a little bit before lunch. But it's an interesting type of setup. I'll tell you why. NETE, had that big gap up this morning, and what you'll see on a play like this. Hold on one second here. What you'll see on a play like this is something really, really interesting. And so when you have a play that gaps up, I don't even know how much this thing went up. At one point, it was up 300, 400%. So it was $5. It gapped up all the way to almost $25 at the open. So you're at like 500% gain. So when you see something that gaps up like that far, you've got to be careful not to just chase it off the first candle, right? Because it could just drop back really fast. So you can see the second candle, this thing, ran back to 24. And when I saw that, it was like, oh boy, this is getting a little bit too crazy. But I want to participate, right? The one thing to remember with momentum trading is it doesn't really matter how much it's up. If you see the pattern, you can definitely just take the trade. We trade patterns, not companies. We trade tickers, right? Not companies. It's just always pattern, pattern, pattern. But the thing that I like to do that works really well, and this is kind of what happened with Elfin the other day, is that when it gaps up that much, when you're like at 80%, 100%, what you need is for the pattern to just tighten. And so it takes a little bit of patience to let the pattern tighten up. And when that happens, that's when you're going to get your run. And the one thing I was remembering when this one gapped up like this was exactly what I did on Elfin, which I made in the previous video, right? Which was that, I went too early at the open and the gap was so big. So the range hadn't come down. And I ended up losing a couple $1,000 in the beginning before I finally hit it. And so, and when this one gapped up, I knew even though I was seeing this consolidation here, I've got to let it compress, right? We get our power from compressions and those bases and the tightening of the ranges. And so I've got to leave it alone. That other loss was still fresh in my mind. And then it was just a matter of, as it's sitting down here, I know I'm going to hit it over the VWAP, right? But when it's touching the VWAP here, the range is still from the bottom of the range. It's 1575 to the top is 1936 and a couple cans. That's $4 rate. That ain't tight, right? And so then it comes back down. I know the VWAPs. I'm telling the guys, like, dude, this thing gets over VWAP. We're just going to hit this thing. And it comes over here, but look at where the bottom of the range is. There's too much loosey-goosey, right? If you got too much space to wobble around, it's not going to work out. So what you have to do is really think about how do you compress it. And so you have to think about trading as law of supply and demand. A stock will travel around back and forth between support and resistance really till a range is broken. And so ideally, rather than having a range like this where you can ping pong around back and forth, we need to compress the range so it's just ping ponging around like it's like a little hummingbird, and that builds up the steam. And so as it's going to go, you can see the range starts to compress. See how your 90 MA starts to curl up, and then it's boom, breaks over the VWAP. I longed about 1,000 shares, so nothing too crazy. And your target is back up the high of day, right? Because that's your 2-tapper. You're not going to really get any more than that because it's only your second test. A lot of times people think high of the day is the breakout, but high of the day is not breakout. High of day has nothing to do with breakout trading. High of the day just means something's at the high of the day, right? The breakout was really here when it broke over the VWAP, and right, the high of the day is just the target. So I hit this thing at 19, and it's just scale out, scale out, scale out. I had a 24 final target on it, got out mine in the 23s, and took up for the day. Right, so really, really simple pattern. But the moral of the story is, due to the fact that it gapped up so much, rather than hitting it the first couple candles, I waited for that compression so that I could really minimize my risk and build up the explosion. So I hope that helps. Guys, I love seeing you all on YouTube today. I love doing those YouTube lives on the crypto trading. If you guys have any topics that you want to see or have me talk about in cryptos, I'd gladly do it. Leave a comment. We are running a Christmas special in terms of a giveaway where I'm giving away a Bulls on Crypto Street trading course, our boot camp course, and our crypto chat room, all combo in it. I'll put a link in there so you guys can definitely participate in the contest. Coming Christmas, I got all sorts of little giveaways that you guys are gonna love, and so we'll try to do something a little 12 days of Christmas or something, and just start this New Year's off right. As always, from the bottom of my heart, I appreciate you guys, putting up with me and watching the videos, and let me know if you have any questions. Take care.